Today's talk focuses on two primary issues. The first is, why is it that every time Tesla announces record sales and revenue and then follows up with earnings, the price of the stock falls 3 to 5% instantly? So we kind of explore that issue as we head into the latest earnings announcement and the likely decline of Tesla's stock price significantly. The second thing we explore today is there's a dialogue that's going on that's focused on the fact that there's a company called LG, which is perhaps the largest producer of lithium-ion batteries behind Tesla in the world. And there have been a number of reports that indicated that LG is actually the Chinese manufacturer, that will be providing the batteries for the new factory. So this is Greg for Tesla Fan Insight. Thanks once again for joining us. If this is your first time on our channel, welcome. If you're a repeat visitor, welcome back. I wanted to also thank our Patreon subscribers as well as our subscribers for your support. It is greatly appreciated. And if you're able to support in either way, we'd appreciate your doing so. So earnings for Tesla are due out sometime in the next week. It's October the 10th, 2019. And we're expecting for the stock price to fall as usual, and hence why we wanted to do this show. So if someone says instantly they know that day why it is that the stock fell in every detail, you could actually say that it's not accurate because there's so many variables that can impact it. But our goal is to address sort of a look at what those variables are, because as the stock price falls in its next round, we wanted an opportunity for our viewers to anticipate it. And the goal from studying it carefully is to sort of develop a regimen for how to trade it, perhaps, looking at options to take advantage of the Tesla phenomenon, or possibly looking at ways to sort of buy the dip, as they say, when a stock price falls. Yes, LG Chem is a large firm based in South Korea. So and by the way, I can see when all of you say hello. We appreciate your doing so. We'll probably start, sort of clipping and pasting your comments into the show so folks can see that. But wanted to note we'll do our hellos at the end of the show. So over the last year, every quarter we're sort of entering the same realm, and that is that Tesla produces record numbers of vehicles, the stock price falls, and in some cases dramatically, and then it will sort of enter a recovery mode, and we end up seeing the stock decline, which kind of occurred over the last week or so. So basically what happened was Tesla announced that they'd produced 97,000 vehicles for the last quarter. After producing those vehicles, it was announced what those production numbers were, and there was some discussion of the fact that the number was maybe 3,000 vehicles light on the lower end of the whisper number, and therefore perhaps why the stock price was down. So we were kind of surprised by this, given that, the cars were produced, they were sold. What's the problem, especially because those are record numbers relative to what the company should have produced, and therefore the immediate impact on the stock price should have been an upward drift or perhaps a nice move or up, or maybe a lateral movement. And then furthermore, not only does the stock price not go laterally or up based on, record numbers produced, you also see a precipitous fall. And we always are fascinated by news media because sort of negative movement of the stock seems to move a lot of folks to make a concern that the sky's falling, and you kind of want to go that way, but then you have to say, well, wait a second, they're selling a lot of cars. So there's this contradiction that's going on. So we wanted to maybe cover 4 or 5 points related to this. The first item that we wanted to talk about is what's called life in the small market cap world. So if you're below $100 billion in market cap, there are techniques that very big companies can employ that will actually be very destructive to any company, including Tesla. So the very sophisticated players on Wall Street have tools that are both, obvious options, techniques, etc., that allow the fact that if you're a below $100 billion market cap company for a 1 to 2 day, perhaps 3 day period, there are certain people that have enough money that can combine both options techniques with their ownership of the stock or movement of the stock back and forth to, in essence, shape what the stock price is of that company. So I wanted to make sure that, sometimes when we make statements, there's an argument like, hey, wait a second, you can't prove that, it's total speculation. There are 2 situations I wanted to review that sort of highlight in general the power of the market to move stock, and they're based on court cases. So if any argument breaks out in our comments section, I'll be able to sort of dig up those items and reference them. One court case that popped up is there's a company called SAC, S-A-C, Stephen A. Cohen Incorporated. And at least in the New York Stock Exchange, there's something called market makers. So basically, there are these people that have to make a market in a stock. And so they're required to have a block of stock that they own, and that stock will sit there to help create liquidity. So what the traders at SAC came up with was a technique to figure out how much stock is it that are they required to hold before they have to buy more as market makers in the New York Stock Exchange. And so what they did was they figured out what that number was, and they would make sure that they would buy exactly that amount of stock, forcing a repurchasing process to rebuild that inventory by that market maker. So this is kind of an interesting process because the market maker would then go in to repurchase the stock, which would prompt an uptick in price. And now that's when Stephen A. Cohen's traders would go ahead and sell into that, making a small profit, but on a large amount of money. This antic can, wind up into large amounts of cash if it's done repeatedly. So you're taking advantage, in essence, of the inefficiency of the market makers. So that's one example. Another of them is that there's a book called The Flash Boys, and one of the ways it was sort of illustrated what's been going on is there actually is a 60-minute story about the fact that when the New York Stock Exchange moved their servers from Manhattan into New Jersey, there was something called co-locating. So there were all these hedge funds and large traders who located their trading machines in the same building and as close as possible to the computers that were running the New York Stock Exchange. So what I found fascinating, so what basically happened is the 60 Minutes did a story about this, and they couldn't figure out why it was all these companies were willing to pay huge amounts of money to be located as close as possible to these machines. It turns out 1 year later, after that 60-minute story, that it was explained that there's a technique called front running, where if someone is going to do a trade and it's known by the traders that this trade is going to occur, they can run ahead and prepare for the impact that that trade is going to have on the market, either move up or move down, depending on whether the entity that's selling is selling large amounts or buying large amounts of stock. And so by putting your computer as close as possible to the New York Stock Exchange machines, once you caught this information, you could, in essence, front run or trade ahead of these trades occurring. And so there were people making huge amounts of money, hence why the co-locating was critical, and that proximity to these machines allowed, even milliseconds would allow you to rush in and do a trade ahead of large trades that were coming in. So there was actually a book called Flash Boys that was written about how this process worked, and the fact that a new exchange was developed where everybody, even the entities in the co-locating space, were forced to go through a fairly long distance movement of that trade through the system, so they couldn't front run large entities that were trying to do trades. So if you're interested more in the machinations of how the stock market works, et cetera, highly recommend you check this out. The final one I just briefly wanted to mention is there was an incident with a company called Overstock.com, where there was a company that was heavily shorting the stock. So they anticipated that the company would do poorly and go out of business. And so there was a lawsuit filed against Goldman Sachs in this case, because Goldman actually helped the company raise $3 billion for their hedge fund. And their hedge fund was able to get the $3 billion. But it turns out that Goldman Sachs knew exactly what the covenants were on those loans. And so basically what happened was, during a time when the stock market was falling heavily during the 2008 crash, Overstock was one of the only stocks that was suddenly rising into an extremely heavily falling market. This whole incident was documented in court in a lawsuit, because basically what happened is Goldman's traders forced this company out of business based on what the covenant said. In essence, the amount of losses they took triggered an automatic selling out of their position, and therefore the Goldman traders made a bunch of money, but the client who had borrowed the money, in essence, went bankrupt. And so there's a huge suit about this. So I just wanted to highlight that, there are these underhanded techniques that do go on. The one last one that I always found interesting is, I call it the black mold technique. So in the building trade, or if you're involved in homes, et cetera, you can develop mold in your home. So particularly in the bathroom is where you'll see it. Well, one of the things you'll notice is the first round of mold is fairly mild, but in each case, the mold will get more and more toxic in order to take over the environment that's previously held by that mold. And so the final stage of what's called black mold, where that entity is so toxic that all the other molds die, and it sort of kills them and is allowed to take over the sort of feeding space that the less lethal molds had originally started on. And so I bring that up in the case of the stock market, because when you think about it, what also happens is some very large firms will actually know what the covenants are and rules are on a number of companies that are sort of within the universe. And so if there's a heavy trading inside of a stock, there's an ability of the black mold folks, the largest and richest traders, to actually attack the smaller firms and try to put them out of business as a way to make money. So what does all this have to do with Tesla? The answer is that when you have a stock that's as heavily shorted as Tesla, one of the most shorted stocks in the stock market, we know there's going to be delta or movement that goes on surrounding major incidents like earnings. So literally, you will have one or all or any of these circumstances occurring where there'll be a war between hedge funds or traders to exact small and possibly large earnings. And if you look at the numbers on Tesla's production announcement as well as their earnings announcement, there's never less than a $10 move in the stock price. In some cases, $20 or $30 moves within minutes after the earnings numbers are announced. So in essence, what, so sort of the back end of this is that, what do we expect to happen with earnings? Well, now that we're getting involved in China and Europe and all these other places, sort of the average selling price of all Tesla vehicles, I guess you blend in what the X and S was about $58,000. So what you could do is calculate the number of vehicles that were listed in the production times 58K would equal the revenue count for the company at that point. And so the number might be slightly higher given the additional cost of transport being added to vehicles. So in theory, you could just say it's 97,000 vehicles, so let's call it 100,000 vehicles times 58,000 would actually tell you what the revenue is ahead of time. So we sort of have to dive into why it is the stock price stays stable or starts to dive based on the numbers that will come out. And it's our assessment that what will happen is that Tesla will come out with earnings. The earnings will be good based on the fact you can extrapolate what the revenue was. There will be a loss. The loss will be at or greater than expected, and most of the loss is driven by the R&D and new products that are not being paid for yet. And so we end up in this situation where the net of all this is sort of a neutral at where Tesla is right now, but only about 8 to 10 trading days after the announcement. Within the same day, we expect the stock price to be down at least $10, if not 20. And then just like what happened with the announcement of the earnings numbers, we expect that these numbers the stock price will then start upticking. And the reason why we see that uptick is that we've talked about this numerous times where what actually happens is the analysts who follow Tesla will write reports and send those reports by email to their largest investors who pay them for those reports. That process will take 2 or 3 days to write and then distribute. And then 4 or 5 business days after the announcement, we'll start seeing the stock price of Tesla usually start upticking because the large institutions now have justification for continuing to buy the stock. And so therefore, there's a sort of battle. 60% of the stock is owned or held by large institutions, 40% by hedge funds and others. And so those large institutions tend to move slowly because their movement can really affect what happens with the stock price. And so this cycle has been going on now for the last year and a half, basically. And we expect it to continue for the foreseeable future. So it's worth understanding. The one sort of safe way to ride the curve of what occurs in this case, we believe, is what's called covered calls. So basically, it allows you to take advantage of this roller coaster ride I just described in a creative way that's profitable with fairly low risk. And we've had numerous folks that we've talked to that are doing this have articulated that they're seeing as much as 3% a month returns by doing this. And when you compound this over a year, this can be some excellent return on investment that you would get for taking the time to approach in this fashion. So I want to thank those of you who requested, what do I think about what's going to happen with earnings? I just explained how one can extrapolate what the numbers are going to be. Because Tesla is still riding in the loss zone, I'm expecting the stock to be down initially and then back up as I just described. But really, China is sort of driving the conversation of what's going to happen with that stock sort of in the near term. And so we'll see what happens there. But I expect, after the hedgies finish dropping the stock price and the large institutions buy the dip and get it back up, I expect Tesla to be at least $10 or $15 higher than it is now, but only 5 to 7 trading days afterwards because the hedge funds are engaged in this epic battle, and it's a small enough market company so that a larger or toxic firm could definitely dominate the stock price in a way that would allow them to win and make a great deal of money in the process. So the next thing we wanted to dive into is this whole discussion of LG Chem becoming the Tesla supplier of batteries in China. So on the surface, this totally makes sense. Number one, they're one of the largest manufacturers in the world. They're reliable. Number two, in Nanjing, they actually have a production facility. Number three, they are handling the production of batteries, I think, for like 90% of the car companies in the world. So adding Tesla to this list actually would kind of make some sense. The thing about it is, though, and there have been news reports elsewhere that have confirmed sort of this is the direction things are going. Now, we want to say that we have a difference of opinion here for several reasons. We don't think that Tesla will use LG batteries for several reasons. Number one, if Tesla hands over core technology that's not been patented, that has been developed on batteries, so that they can get performance from their vehicles that are being produced in China to be the same as the US, you now have LG in control of information they can use to produce and deliver batteries to Tesla competitors. And so we believe that, like if you look at the history of Tesla, in the case of Gromine Engineering, once Tesla purchased Gromine Engineering in anticipation of building several factories and using their automating technology to do so, you'll notice that instead of Tesla simply remaining as a customer of Gromine and happily going along its way, they elected to buy the entire company and then get rid of all the other manufacturers, BMW and others, that had Gromine as a customer. And so Elon likes to purchase key companies and have a very tight partnership there as a way to reduce the impact of competition on Tesla. So number one, when you look at the vertical integrated strategy that Tesla likes to pursue, guided by Elon, he likes to own as much of the technology as he can, and he does not like sharing what he's doing technology-wise with other entities. So via LG, there's the potential that anything done for Tesla in the battery space ends up in the hands of competing firms soon, if not immediately, then not so immediately via LG having to build or signed to build batteries for almost everybody else in the large auto space. The second thing so bottom line is Tesla likes vertical integration. Bottom line, Tesla hates the idea of not being fully the number one customer or only customer for certain key technologies, and batteries are definitely that. So the question that sort of pops up is, what happens? So who might the supplier be? The answer possibly is cattle. Elon Musk has said, it's just interesting because Elon has talked extensively about sourcing the batteries for those vehicles from the US, Asia, and China, but he's been very cagey about publicly stating who that is. So even though Bloomberg and other entities are all chasing after each other saying LG, LG, we would beg to differ. We think there might be batteries being produced, but the entity that it's going to come from is going to fit the profile that we have, for example, in the case of Gromine, where it'll likely be a manufacturer that has very few customers in the space. Tesla has the potential, if not right away, to go ahead and buy that firm so they can reduce the possibility of secrets shared with that company being sort of rolled out to others. So, we don't know who that answer is. Obviously, there are a lot of likely suspects like cattle, definitely not BYD. It may be another of the smaller Korean manufacturers, but sourcing batteries from LG really doesn't fit how Elon likes to do business, based on the fact that they don't like to and typically don't patent everything, and so they have to partner with someone that they can trust, basically, that won't distribute their capabilities to other firms. Do not be surprised if the Panasonic division in China ends up being the partner, because that would be sort of a natural fit given the existing working relationship they have. I'm also eager to see what happens with China, because so the way things are going, people are giving this impression that Elon just signed a deal 2 months ago for batteries for the Gigafactory, even though the planning for this thing has been going on for 4 years. So I just believe that the supply chain has been in development for a long time. So therefore, we'll see efficiency and efficient production coming out of that space without a doubt. And we kind of look forward to how this is going to go. Now, I was glancing through and saw a couple of questions. We did answer the question about what we think revenue is going to be. I shared how we calculate that, and if you want to go through the 58,000 times 100K, ish is what we are forecasting the numbers to be on that front. The other question that was posed is the impact on of solar and insurance on earnings potentially. There's going to be some impact in terms of those numbers coming in. The problem I see is that the amount of revenue coming in from cars is so large that it dwarfs the relatively small amount of revenue that they're gaining from these new spaces. In the case of insurance, they're only operating in California currently and not everywhere. And so that number isn't going to be huge. Solar has actually been suffering a bit. It's been losing money since it was purchased. And there's been a discussion of the rollout finally happening for the new roofs. We're looking forward to seeing that in the revenue that comes from it. But there just seems to be a lot of delays going on there without an answer for when we're going to see scale delivery of those products successfully with more revenue. So yes, they could impact things if they came in strong, but we don't have any huge expectations of them having numbers significant enough to affect, the company positively or negatively. We do believe, though, that the comments made about what's going on in China during this earnings period will significantly impact the stock. And we sort of see a small potential for downside and a huge potential for upside, because if Tesla's talking about putting out, 5 to 10,000 cars a week out of that plant in a reasonable amount of time, those numbers are going to have a big impact on the company, and therefore earnings, revenues, all the numbers would accelerate in the process. So that's our take on those two. Before I get into our health segment, I just wanted to thank Jerry, Dredd, Bretta Donovan, the Gates, our friends from Germany. Thank all of you for joining us live. Always appreciated. Just a reminder, we'd appreciate you taking time to like and subscribe if you haven't done so. Could also use support on Patreon if you would. We have a show coming up. We're doing a show on marijuana, because I actually met a doctor who specializes in that in Ohio. And we were amazed at some of the comments that she made. I'm still digesting everything that she went through. I think we may bring her on for an interview. But one of the things she pointed out that still sticks in my head is the fact that, the side effects from using marijuana as a pain management is way better than what we're seeing with opioids. And so as it's being legalized, more and more people are using it. I was kind of shocked, because she was saying that in Ohio, where she is based, they're charging $500 an ounce. The contrast to that is that in Oregon, because their grow is so huge, at the end of the month they're charging as little as $18 the ounce, because they're trying to burn all of it before the end of the month comes, and they tend to have overstock. So if you're out of the United States and want a good visit with legal marijuana, you might want to consider Oregon in the process. We will dive into this further as we get more information, but I was stunned. I didn't know anything about there being doctors focused on prescribing marijuana or cannabis products for pain management, et cetera. And that it's a significant number of people, 500 in Ohio, for example. And it's new for a lot of docs, because they became doctors after the whole movement to medicinal marijuana, and this training has arrived. So interesting zone. As usual, I want to remind you, 25 leg lifts per leg as you roll out for the day, with a 5-pound weight on that leg, as a way to strengthen the quad muscles, strengthening the knee area, and also helping tone throughout the body. Ethan actually posed a question about speculation on what's going into the Model Y. I just found it interesting because, as you know, the Model Y is coming out end of next year. According to the statements made by Panasonic and Tesla, there's about a 5% improvement in energy density each year, and we get to see that play out in the vehicles. I have to admit that I haven't read anything or heard anything about Model Y's battery technology being that different from what we're seeing in the current Model 3, but that's entirely possible. And so we'll keep you posted as we get more information on that, but I don't see it being that great. There is one stunning piece of data in the battery zone that I'm studying, and we look forward to any comments you guys may have. And that is that it turns out that the e-tron's battery is like 100 kilowatts, and Tesla's Model X battery is 95 kilowatt hours. And the e-tron is getting approximately 204 miles in range from that battery, while Tesla is getting 289 miles of range. So there's an open question as to why is e-tron getting so little range out of the exact same battery as Tesla, and VW hasn't answered the question of why that is yet, but it makes a significant difference to consumers, what that distance is, and the flexibility it gives you to not have to be chasing a supercharger all the time. So we think this is an interesting mystery question that's worth all of us reviewing. I have to admit that I want to thank you for questions on the marijuana topic. I don't have any particular, I'm not a smoker, but I don't have any problem with anybody who does. I just find it interesting that I'm sort of getting up the learning curve on this, and the opiate epidemic is so severe. It'd be nice to see something else come in. One of the comments that the doctor shared with us was that you can smoke as much as you want. All that'll happen to you side effect wise is you would fall asleep, versus with opioids, you could die from consumption. The other shocking point she made, which I didn't know, was that there are a lot of people who are users who end up with opioids killing themselves because their breathing is suppressed by the drug use. So another interesting point on the whole thing. At any rate, I want to thank you all for taking time out to join us. This is Greg for Tesla Fan Insight. Tschüss, macht's gut. German, au revoir. French, lehitrot. Hebrew, choda hafez. Farsi, hedge du. Thanks for our friend Donovan from Sweden. And I wanted to note that we'll try to post your statements at the end of the show, and appreciate if you do so as well. Look forward to your comments on the show. We're looking forward to some good earnings and the stock being down as usual. And look forward to any and all comments that are constructive in the process. Have a great day, and bye for now.